Good morning, everybody. I hope you're all doing well and getting back to work and getting lots of closings. So I know we're all excited for the summer weather, and that's the peak of business. So good time to get back to work and showing property. So we're going to talk this morning about navigating the PPP loan forgiveness. I work in the tax area, and my other speakers here, Andy Rose and Susan West. Andy Rose also works with me in taxes. Susan West works in our, is a principal in our human resources solutions area. So at the end of our webinar, we'll be taking questions on either taxes, PPP loan forgiveness, or if you have questions regarding human resources, getting back to work, how emergency FMLA may be available to your employees, how you may need to adapt your offices for getting back to work. Susan West can address those questions for you. So I'm glad that she's here in case any of you have some questions that are not related to PPP loan forgiveness. So once the COVID era hit us tax accountants generally shifted gears and went from preparing tax returns to PPP applications. So for those of you that have yet to get your tax returns, they're generally due July 15th. So we have a little bit of time yet to get that compliance. But all of us are really working hard to try to help our clients and our general business community understand PPP applications and then all the other resources that are available to them. The PPP program was generally about getting money into the hands of employees through their employers. We've heard a lot of buzz in the news about companies who maybe did not keep in line with the spirit of the law. And we've also heard that companies who are getting loans more than $2 million may be tested or audited to see whether or not they actually needed those funds. Now, for our purposes here, probably most of the people online are falling underneath that lending limit. We're going to be really looking closely at what happens for self-employed individuals under the PPP program and PPP loan forgiveness, and that's the focus of this presentation. If you are a broker that has a number of employees, a larger office, we have another program that's coming up on Monday, and that will look more in depth at the more complicated portions of this PPP loan and the PPP forgiveness. For today, we're really going to be focusing on self-employed individuals or individuals who are operating as partnerships or S corporations with just a few employees. Now, the PPP loan program was generally available on a payroll-based type loan. So we were going to be looking at 2.5 times your average monthly payroll costs and a couple additional expenses such as mortgage interest or interest on personal property, utilities, rent, health insurance for your employees. Those are what the lenders were using for the lending base. Banks are now up to speed in getting these loans processed and out the door. There is still an opportunity to get a loan through June 30th. PP funds are still available. So if you have yet to apply, please consider doing so. Now, we had some law changes that happened yesterday. And that's another reason why us as tax accountants and anybody else in this profession is really working hard to try to stay up to speed on this stuff. I had prepared this presentation yesterday, and then around noon, I got news that there were additional law changes. So if there's any reason for drinking bourbon, I can say that COVID and our PPP law changes are definitely it. So up late last night trying to get this presentation modified for the new law changes that came through. So let's take a look at what some of those law changes look like. Our initial PPP loan forgiveness program looked at an 8-week period for generating loan proceeds and loan forgiveness. We have, through the law changes yesterday, have now modified that. So now we have a 24-week period that we can have expenditures, payroll expenditures, rent expenditures that will allow us to build our forgiveness base. Self-employed applicants under the PPP program really had a tough time being able to apply for the loans initially. They had some guidance that came out a little bit later on how to apply for those loans. If you're a self-employed individual, and by this we are really looking at those people who are filing Schedule Cs. Those are our self-employed individuals. And you as real estate brokers and agents may view yourself as being self-employed because it's your own sweat that's generating your revenue. From the tax perspective, we look at self-employed individuals as how are you filing your tax return? And for purposes of this law, we're looking at Schedule C filers. So a self-employed person, to get a PPP loan, needed to remit their 2019 Schedule C. Tax returns are not due until July 15th, so you may not have had that available to you yet. However, to get a loan, the banks were really going to be asking you to at least prepare a 2019 draft of your Schedule C. Whatever the net profit was presented on that Schedule C, that's your lending base. Now, for some people, they may not have been all that profitable in 2019. There really was not an avenue for you to be able to say, hey, my revenue in 2020 is looking higher. I may have more opportunity for greater loan proceeds. Unfortunately, the loan program doesn't have much wiggle room for Schedule C filers. The maximum amount of a loan that a self-employed person with no employees could receive, it was $20,833. And the way they arrived at that was $100,000 maximum Schedule C divided by 12 times 2.5 months. So even if you are a highly profitable Schedule C filer, the maximum amount that you're going to be able to receive is that $20,833 amount. Law changes that happened yesterday that we discussed is allowing forgiveness of that loan up to the $20,833 amount. That is really, really great news because previously we only had access to forgiveness of about $15,000. The law, the way that it was calculating the loan forgiveness was $100,000 divided by 52 weeks times an 8-week coverage period. And unfortunately, that granted a disparity of about $5,000 between the amount of the loan that you could get versus the amount of the loan that was going to be able to be forgiven. The law change yesterday corrected that. So now your full loan amount can be eligible for forgiveness. One of the criteria for self-employed people is looking at, well, although the law discusses loan forgiveness, it doesn't discuss how self-employed people are going to have to treat the loan proceeds. If you were a traditional employer who received the loan proceeds were considered not taxable to you. But as a Schedule C filer, since you are using those loan proceeds to, in effect, substitute your 1099 commissions, those loan proceeds in actuality are going to be taxable to you. You're going to hit that, that line 1 of your Schedule C as net income to you. This feels a little bit contrary to the intent of the loan in that people weren't supposed to have to pick up income for receiving a loan or income for loan forgiveness. However, we have to remember that when we're receiving this loan as a Schedule C filer, we're really receiving it as a substitute for our compensation. And because of that, those loan proceeds are going to be taxable to you. And they're pretty much taxable to you the day the loan is funded. Now, if you're a Schedule S filer, an S corporation, That may not be the case. S corporations will generate W-2s and generate payroll for their owners and for their employees. So that's a different conversation. But for Schedule C filers, generally those loan proceeds are going to be taxable right away to you. Now, from a borrower's point of view, what can you use your loan proceeds for after you've remitted your application? You can use those loan proceeds primarily for payroll. And as we mentioned, we talked about that the intent of the law was to simply cover payroll. 75% of those loan proceeds had to be used for payroll, and the remainder amount could be used for non-payroll expenses such as that mortgage, interest, utilities, and rent. Law changes yesterday changed that ratio to a 60-40 split. So now 60% of the loan proceeds should be used for payroll in order to be eligible for forgiveness. One of the other law changes that came through very recently, not yesterday, but very recently, it was how do you measure that payroll? Well, now there was a question of whether or not that payroll had to be issued during that 8-week coverage period. And that's not really the case. The payroll can also be determined on an accrual basis. So as the employee is earning their payroll, that's how you're going to measure that, the amount of payroll that's going to be included in your forgiveness calculation. And they really want you to be consistent. So however you applied for the loan, you want to use that same sort of approach when you're applying for the forgiveness of the loan. But at least we have some clarity here that you didn't have to hurry up and run an extra payroll to file on the cash basis, that you could use your regular payroll reporting and to determine how much you were going to be eligible for forgiveness. Other things eligible as payroll are employer-paid group health insurance, employer-paid retirements, and employer-paid state and local taxes on employee compensation. We talked about what other non-payroll costs you could use. Previously, the law said maximum was 25% on non-payroll related items. Like yesterday, that was changed to 40% for items that are incurred during your coverage period. One of the questions that was frequently asked is, hey, could you prepay some items? Could you prepay rent? Could you prepay mortgage interest in order to kind of push it into this previously very limiting 8-week covered period? And some clarification that came out yesterday and over the last week that said you cannot prepay mortgage interest in order to push it into your covered period. You may be able to prepay some other expenses. Like what about a retirement contribution? If you're usually only funding that once a year, could you maybe change the timing of that funding into your 8-week covered period so that you're making the deposit during that 8 weeks as opposed to after that 8-week coverage period? Because of the law change yesterday, that is now changing our coverage period from 8 weeks to a potential of 24 weeks. Some of the idea of having to push our expenses around during the year, our timing of paying these things is kind of removed. We now have a much longer period in order to meet our 60-40 split to get up to the level of full loan forgiveness that everybody is really striving for. When you're applying for the loan forgiveness, this is again another development that came out yesterday and over the last week. Any documentation that you're using to either apply for the loan or for loan forgiveness needs to be retained for a period of 6 years. And 6 years is really relevant because when we look at a statute of limitations from a tax perspective, generally we look at 3 to 4 years, 3 years for federal, 4 years for the state of Michigan. 6 years is beyond our normal statute period, and that's because we're looking at lending here. This is not really a tax matter. This is the lending matter. So you could be audited for a period of 6 years if you have received these PPP funding. So make sure you retain that, have a good solid backup system. IT security and systems is a topic for another day, but that's definitely something that you want to take a look at. What is the maximum amount of loan forgiveness that you could get? I've mentioned several times now that the previous split was a 75%, 25% calculation. The law changes yesterday are now focusing on a 60-40 split. And you have the opportunity of expending those loan proceeds over 24 weeks in order to meet the maximum coverage. These are really, really business friendly, and I think really recognizes the fact that the impact in our business community is much longer than what was initially anticipated through this program. And we also have to keep in mind that this program is a federal program, right? So it's trying to meet the needs of everybody nationwide. And some states like Michigan that may have been more restrictive in opening are having a greater business, our businesses are recognizing greater impacts in not being able to meet the previous 8-week covered period. So thankfully, we've now moved into that 24-week covered period as an option. You do not have to use it, but if you find that you are having challenges in expending your full loan proceeds as anticipated, you have the option of using that. That covered period is measured from the date you first received your loan. So if you haven't yet applied for your loan, you can move into that. You will have that full 24 weeks after you receive the loan in order to spend it. One of the other things that came about through the law changes yesterday was understanding an FTE requirement for forgiveness. So we're going to go through that here in just a minute. If you have received your PPP funds, you're going to want to be able to track how you've expended those funds. And people often ask, well, how do I do that if these funds are just being deposited into a regular bank account? We recommend that if you have employees, that you are using a different pay code when you're paying out funds from the PPP loan. We also recommend separating general ledger accounts. Those are very easy ways, especially if you're using a program like QuickBooks, to be able to track those PPP funds and the use of those funds appropriately. Many lenders will have recommendations on how they would like you to set up your general ledger system. Some have recommended setting up even a completely separate bank account. Work with your lender to determine what they would like you to do and how you're proving out you're spending those loan proceeds. Supporting documentation from payroll. Very typical tax forms, 941 forms. If you use a payroll provider, they should be able to print the reports for you and retain those reports. Bank account statements, all of those are going to be very relevant in supporting how you've spent those loan proceeds. I'm going to flip through a couple slides here so that we don't run out of time too much. One of the things that I really wanted to talk about was in doing our FTE, in doing our loan forgiveness calculation, there was this idea that if we weren't able to maintain our payroll, either in the number of heads or in its dollar amount, then potentially our loan forgiveness amount would be reduced. The law changes yesterday and over the last week have helped us to understand what that calculation really looks like. If we have part-time employees that may be working 40 hours one week, 35 hours the next week, 55 hours the following week, we can average their hours, divide by 40, and hopefully that person has averaged more than 40, but they are capped as an FTE of 1 then. No individual head can earn more than a factor of 1 in our FTE calculation. There is a separate simplified method for determining our FTE equivalents. You can use it where anybody who is a salaried employee can get a factor of 1, and anyone who works under 40 hours a week can get a single factor of 0.5. That was a law change that came through yesterday, and that would be really helpful in determining our FTE reductions. So our FTE adjustment in determining our loan forgiveness is really looking at what is the average number of people that we had employed prior to getting our loan and then during our covered period. The law change yesterday allowed us to have kind of a cure period if we dropped the number of FTE heads during our coverage period, simply because they weren't, you had to furlough employees, or maybe you didn't get the PPP loan soon enough, so you dropped people quickly. You have a cure period that you can hire those people back. Or what if your revenues, you weren't able to open your doors quick enough in order to support hiring those people back after you received the loans and an 8-week period had expired. Like our restaurants. Restaurants generally, you know, are only opening up at 50% capacity. They're not going to be able to support that FTE head count that is needed to get full forgiveness. Well, because of the law changes yesterday, we now have until December 31st in order to cure. So a very nice period of time to get our number of FTEs back to where they needed to be in order to be eligible for full forgiveness. I've included in the slide deck kind of a calculation of what it would look like if the amount of forgiveness was reduced because of an FTE count reduction. Generally looking at the percentage of employees from the period prior to the covered period, and whatever that percentage is, that's generally what your loan forgiveness is going to look like. Because of the cure period, you have an opportunity to get credits back. So if you dropped FTEs during your coverage period, you now have until December 31st to rehire those individuals or a similar type person to cure your FTE count. I'm going to flip through a couple of the slides here because we're going to run close on time, and there's a couple other areas that we should probably be talking about in terms of required documentation for your PPP forgiveness. Our non-payroll documentation, any mortgage interest or on real property or personal property, you'll need to keep all of that documentation, 1098 forms, amortization schedules from your lenders to be able to prove how much you're paying during either your 8-week optional or 24-week optional coverage period. Any rent or lease payments that you're making on your, if you're a Schedule C filer, or if you have a S Corp or partnership return, you'll need to keep the invoices on your utility payments, keep copies of your current lease arrangements. And again, remember, this is a 6-year period. So if you have a related party lease, make sure that your lease documents are up to date, that your lease is at current market rents and is fairly stated, and that you have a good solid copy of it. Contact maybe your attorney if you don't have one in your files, but you will need to keep that for 6 years. You know, one of the things that came about through these myriad of discussions that all us professionals had, it's not uncommon for a person to have what's called a related party lease, whereas you are the owner occupier of a building and your business is set up as a Schedule S maybe, or as a Schedule C. So your business entity is paying you rent that you then report on your 1040 return. That's generally what we call a related party lease. Some people who are applying for loans were asking, could they increase the amount of rent that they were normally paying each other? I would say generally we were discouraging individuals from trying to kind of work the system. So any related party agreements, or you can look even at employees who are related to you on payroll, try to keep within the spirit of the law and avoid the draw of paying either those related party leases at higher than what you would normally have been paying or have historically been paying. The lenders will be looking for variations in loan proceed uses that kind of look like that. Some of the things that we can do, though, in order to increase our expenditures during the loan proceed period is hazard pay. So hazard pay, bonuses, retirement contributions, those things are all being allowed and looked at favorably for use of PPP funds. But again, we want to stay within the spirit of the law and not get a little bit too greedy. Hey, Andy, are you still there? I'm going to ask if you have anything to kibitz on or any contributions at this time.
I am still here.
Okay. Any comments at this point?
I do not. I have some comments, but I'll hold them till the end in general.
Okay, terrific. Sounds good. All right. So we have about 3 more minutes here to talk about considerations under the PPP loan. In those 3 minutes, I'd like to kind of highlight what it might look like if a broker is set up as an S corporation. S corporations are required to issue payroll to their owners for any services that they're providing or working as within that S corporations. Now, occasionally we have an owner who is not working in the company. However, from real estate, that typically doesn't happen. You have the owner who is working in the company. That owner is supposed to be drawing a W-2. That W-2 is what you'd be using to determine the lending base for your S corporation. So if your S corporation had not issued you a W-2, if you had not been drawing wages from your S corporation, if you were simply pulling out all the profits through an S dividend, you may have found that it was really challenging to get a PPP loan. And that's one of the reasons why we as accountants will encourage our S Corp owners to please recognize that the services that they are providing in the S Corp are supposed to be compensated to them through a W-2. Now, if you were doing that, congratulations, good for you. You would have had a good lending base potentially for the PPP loan. So the S corporation will have received the PPP loan based on that W-2 lending base. You have the opportunity then of kind of dribbling out those loan proceeds over either an 8-week period or a 24-week period to fund your paycheck. The good news about that is that if you are also filing for unemployment, you can kind of streamline the amount of PPP funding to your W-2 in order to balance the amount of unemployment that you may have also been able to receive. So that's kind of one of the nice perks about being an S Corp. There's a lot of other perks about being an S Corp, again, for another discussion, but good to evaluate whether or not you wanted to be continue working as a Schedule C filer or moving into that S Corp arena. As a Schedule C filer, you will have found that applying for your PPP loan, we mentioned that you'd be using the net profits from your Schedule C. You are limited to receiving $20,000, and the day that you receive that $20,000, you realized compensation to yourself. If you had applied for unemployment, there wasn't much guidance on how you were supposed to be able to report those earnings to the unemployment office. Because those earnings were really designed to cover potentially 8 weeks of payroll, there has been some support for saying that you'll have to certify each week in that 8-week period that you received some level of compensation. However, there is not clear guidance on it. One of those things, and the state of Michigan hasn't provided guidance on it either. So, but something to consider. You could certify that you received it all on that same day that your loan funds came through, or you could consider certifying it in each week of that 8-week period as a portion of covering for your compensation. If you are a person who has the PPP loan, you may be looking at, well, what other benefits can I apply for? What other tax things am I eligible for? You are still eligible for an EIDL loan through the SBA. That, however, is not a forgivable loan. It's really kind of a traditional financing vehicle through the SBA. You are not eligible for using the employee retention credit, which is another kind of tax benefit that was provided from the CARES Act. They really wanted to avoid people layering on benefit after benefit. So they're going to isolate and say, you need to pick what's best for you. Hold on here a minute. I have one of the things in my life that is COVID related, and this is having my kids work with me at home. So hold on while I excuse him a second. Maybe Andy, you can kibitz in.
Andy, you're on mute.
Ha.
Oops, sorry. Another one of those Zoom issues. So Laura, a question came up while we were covering a few of these topics, and I think that it's a good one for the entire group because I think most of the people on this call are going to be impacted by this question, and so kudos to Christy who asked this, and maybe you're going to cover this later on at the end. I don't know, but I think it's a good time to ask this right now. So for a self-employed individual, no employees, so it really doesn't get much simpler than that because we don't have to look at any reduction in FTEs or salary or any of that. Can 100% of the PPP loan be used? And she stopped there. I think she's asking, can it be used for income replacement and forgiven as income? So I think what the question is can you essentially achieve 100% of forgiveness in this particular situation where you're self-employed and no employees?
Yes, forgiveness in that you don't have to pay it back. And that's what we have to remember is the definition of forgiveness, is that we don't have to pay these funds back. Is it going to escape taxation for a Schedule C filer? No, it's not.
Because of the deduction limitation?
Not necessarily, but because it's really meant as substitution for your normal Schedule C income. If you were out generating closings, you would be receiving commission income, 1099 income from your broker, and you're not receiving that any longer. So you're looking for a substitute for your commission income. This PPP loan is substituting for that, right? It's pulling into your Schedule C those things that you would normally be trying to work for. And look at it compared to like a regular employer. So Raymond, we're too big to apply for a PPP loan. PPP loans were designed for companies that have fewer than 500 employees, and that's not us. But if I were an employer that applied for the PPP loan, I'd receive those funds, put it in my checking account, turn it around and drip it out to my employees through their paychecks. Paychecks are taxable income, right? So somebody is paying tax on receipt of this fund, of receipt of these monies, and that's your employee. And when you're self-employed, that's you. So you've received the funds, you're receiving them as a substitution for your commission income. So although you don't have to pay them back, meaning that they're forgiven, you do have to pay tax on them because it's a substitute for your other business income.
And that again would be the $20,833 that they most likely, if they had $100,000 of income in 2019, that would have been the maximum amount.
That's correct. Yep. And I mean, that would be considered self-employment income, right? Mm-hmm. So you could use that for setting up a retirement account or contributions to your SEP plan or to your IRA or to your Roth. So there are other tax benefits that come about from earning Schedule C income. So you don't have to pay it back. You can look at it if you're, if your highest tax bracket is 31%, you're paying 31% on the dollar for receipt of that $20,000.
Now, it may be a different result if Congress acts and comes out with something along the way of allowing this forgiven amount and the expenditures related to the forgiven amounts to be deducted.
So thank you for leading up to that. So if you were an S Corp, as many brokers are, generally they're Schedule C filers or they're S corporations. If you were an S corporation and applied for the PPP loan, again, the funds were deposited to your checking account. You look at, well, what do I do with this money? I'm going to run it through my payroll. If you apply for forgiveness on the loan, the IRS has said, hey, that forgiveness isn't taxable to you, but we're also not going to allow you to double dip and pay your employees and get another deduction for that payroll or mortgage interest or utilities. So to the extent you've applied for forgiveness, you're highly likely not going to be able to deduct those items that you use the loan proceeds for. So again, you don't have to pay it back. That's wonderful news. But anything that you're looking at yourself as kind of a flow through entity. And that's really the way this funding was designed to do. It was, how do I get more money into my employees' hands? I take the PPP loan, put it in my account, push it through their W-2s, and I'm just a conduit, right? So the IRS has said, listen, in that situation, the monies coming in aren't taxable to you. However, the use of the money is also not deductible to you. So a zero-sum game. Right.
And who knows if that will change or not? That remains to be seen.
Yeah, agreed. I know that really wasn't Congress's intent. They didn't want to have to create a tax burden for companies keeping their employees paid. Right. So
that's the only question we have right now, Laura.
Okay. So let's talk about some of the other things that are happening that are COVID related. Or excuse me, I'm gonna pause on that a second. There's one other things I wanted to show our participants, and that's the PPP loan applications that were released yesterday. There is now a EZ form. Excuse me while I get there. Ta-da. And if you are a Schedule C filer, which maybe Christy is, you can apply for forgiveness very, very quickly using this 3508 PP. So this particular loan application is the normal one. Let me see here if I can find my, here's my EZ form. We'll open that up. 3508 EZ. This is if you were a borrower, a self-employed individual, you did not reduce annual salary more than 25%, meaning that if you had $100,000 worth or more of salary in 2019, and that was the full amount that you applied for and received, and you did not have any employees this year, you can use this form to apply for forgiveness. So very nice, streamlined application. I believe this is available on the SBA website now, so go take a look at that. Now, banks may start processing loan forgiveness applications now. I mean, the 8-week period is kind of expiring from some of the first companies to apply for the PPP loans. So banks are gearing up for being able to accept these applications for forgiveness. However, in talking to a couple of banks over the last several days, although they are in theory going to be allowed to accept these applications, they're not quite ready for it. Law changes are happening so often that their systems just aren't geared for it yet. And I can tell you the law change yesterday probably put them back a little bit again. So talk to your banker if you got the PPP loan. check out when it is that you're going to be actually able to remit this, when they're going to be ready to receive your applications. Susan West is on the line, and Susan, how do you see the PPP loans helping employers in, keeping their employees engaged? How do you see the return to work coming about now that things are opening up?
Yeah, so good morning, everybody. I have found that a lot of our clients are really happy that they're able to put their employees back to work, that the PPP loans allowing them to do so and bring them some income once again. Many are trying to work through, as you mentioned before, Laura, the opportunity to balance maybe a reduced work schedule along with utilizing unemployment, so they still have the opportunity to get the additional 600 at least through July 31st. So
Right.
they're really working with what is the work need to identify how they can have the win-win for the company to have people working and balance their FTE requirements. So it's a bit of a numbers game. It's why you and Andy become so important in helping them. We've also found that some employers have experienced employees who are still just fearful. They're, don't want to be exposed for a variety of reasons. In that particular case, there's a more discussion that needs to be had to understand whether that employee is really eligible for one of the leaves, whether it's the emergency family medical leave or if it's the paid sick leave. And that just takes a different detailed kind of conversation with that employee to understand what's the best path and what eligibility do they have. When it's truly a scenario that one of the leaves don't apply and then the employee is truly fearful, then unfortunately that becomes an event where the employer needs to identify that they may no longer be eligible for unemployment because there's a work opportunity and they're denying it. So that's where a frank conversation, just so that the employee fully understands that not only will their unemployment be impacted, but potentially any medical benefits that the employer is providing. So to me, that's a case-by-case scenario and a very transparent kind of conversation. So there's no surprises. We want to do the right thing here, both as an employer in terms of the way we need to report, and also then with the employee to make sure we're, following proper protocol and communicating, all the different requirements. So it's more than one conversation usually.
And in that, so the law changes that came about yesterday talked about what happens if you have, you would need to expend your PPP loan funds. You try to get your employees back, but they don't want to come back. So now you don't have the opportunity to send those PPP loan proceeds out via payroll. And you're concerned because you're at the two things that can cause a reduced forgiveness component are not being able to maintain your FTEs or adjusting employees' salaries by more than 25%. So here you're actually inviting your employees back, but they don't want to come.
Mm-hmm.
So the law changes yesterday said if that's the case, you don't have to include that person in your FTE averages. You've made the legitimate attempt to bring that person back. And they refused. So if you're not able to find a suitable replacement for that person, maybe their technical skills are such that there's not a ready market out there of people with that similar type skill set, then you don't need to include them in your FTE count. And that's nice, right? That's one of those, they call it the PPP Flexibility Act, and recognizing the limitations that we have in expending these funds if we don't have our employees coming back. Yeah.
So
Hey,
Laura, the
Laura.
only thing, oh,
Mhm.
sorry, Andy. The only thing I would add to that, though, is I would recommend all employers have some sort of written communication with their employees, just so that not only do we have the documentation to demonstrate that they weren't eligible for a leave, so we're not providing a leave where it's available, but also to support the PPP Flexibility Act, where it may not be it supports the reasons why you didn't include them in the documentation, and that it's not just a verbal conversation or misunderstood, that it's well documented.
And I think employers need to provide reporting to the state agencies, right, within 30 days?
Yes, usually they
Okay.
receive a Form 1575 from the unemployment agency verifying work, and if they now have employees that they've asked to return to work and aren't, then yes, that needs to be reported as well.
Okay. Great.
You read my mind, Susan. I was going to hit on the same thing.
Oh,
Documentation,
perfect.
documentation.
Perfect.
And more discussion is occurring now. We can see in the news and regarding companies that maybe didn't need to get the PPP loans, but they did on the outset because they really couldn't tell whether or not their business was going to be affected. I think realtors are one of those that we can clearly see that your business was going to be affected because you couldn't show homes, right? Residential realty is being affected different than commercial realty. I have some commercial realtors who are doing just fine because their ability to show property was much less inhibited. But residential real estate was highly affected. So you need to get documentation from either the Greater Lansing Association of Realtors, if they can provide it, or any other real estate type industry on how your market was affected, specific to your geographic area. Document that, put it in your files to show that you really did see a potential for economic downturn, and that's why you got the PPP loan. Because there's a lot of discussion now on recognizing, well, maybe some companies didn't need to get it. Maybe if your company wasn't able to show that you had a dip in revenue for the year, that maybe you might not be eligible for forgiveness. Not law right now, but certainly is a buzz in the community as we're seeing profitable companies come out of this COVID environment.
And that's a great point, Laura, because if you look at the application, the simplified application instructions, and I believe it's in the full too, is talking about the need for documentation supporting the borrower certifications for the necessity of the PPP. So even though I think we can get there pretty easily, especially considering the fact that Michigan was so hard hit, I would put something in with your documentation and document some of these things that Laura was talking about in terms of the state of Michigan, how hard it was hit, the fact that we had an executive order that prevented realtors from showing homes, all those types of things. Will you ever need it? Hopefully not, but if it's a year down the road or even 2 years down the road when someone wants to see this documentation, it's much easier to put all that together right now than it is at that point down the road.
Yeah, definitely. I have seen some publications like that, and we do have to keep in mind that this is a national program, right? So they're trying to provide guidelines that's going to be able to work for all taxpayers, and they're just not going to be able to get there. It's not cookie cutter. And so the discussion of needing documentation, of being able to prove that you had some sort of economic uncertainty when you actually applied for the loan, and then you had a dip in revenue or a dip in business or some sort of thing when you're applying for forgiveness. So let's remember, in this PPP application, you can apply for the loan. You can use it for payroll and mortgage and things like that. You do not have to apply for forgiveness. This can actually be a loan for you, a very low interest rate loan that is now, if you had your loan funded after June 5th, is payable over a 5-year amortization at 1%. So very low financing. So if you find that maybe your business didn't suffer the economic uncertainty, that you're still very profitable, that you really don't have justification for applying for forgiveness, you don't have to. That's not mandatory part of this program. You can pay back the loan. A number of people are going to go like, well, why would you do that? Well, because maybe you can't meet that requirement, that your business really experienced that dip in economics that you thought was coming, but didn't actually occur. Do we have any other questions on the live chat from Facebook? I don't have access to that feed, so I can't see what's coming through.
I do not see anything on the Q&A.
Nope, not on Zoom, but Amanda, are you there? Would you be able to?
Or Julie?
Yeah.
I don't have the live feed on Facebook, but I'm sure Amanda is watching it for us. So if she hasn't chimed in already, I'm going to assume that we don't have any questions.
Okay. So today covered a lot of information rather quickly in a half-hour period. Some of it may not have followed exactly kind of a nice stream of thought. However, that's the way these law changes are occurring. They occur rapidly.
Some of this may change tomorrow.
And it probably will. So, like I said, you know, some of these law changes came through yesterday, and I was notified at about noon, and so I had to kind of scurry to read through the law changes and get it posted into our program. So there's a lot of information in the slide deck that we didn't cover. If you need more information, Raymond is having a webinar on Monday. You can see on this last slide here, it's from 1 to 2 p.m. Covers the new easy applications and some other updates on the PPP forgiveness. There's going to be a number of professional organizations that will be discussing these most recent law changes that came out yesterday. And so you can, if you have one particular organization that you're working with and you're not getting the information that you need from them over the next couple days, go ahead and dial in on Monday. Or if there's a lot of unanswered questions after this and you're going to go back and noodle some things, go ahead, re-listen to this webinar on Monday, and that hopefully can provide some more guidance for you. We also have our website posted, a number of other resources there, including how to open an office back up in COVID and having a safe work environment, human resources through Susan West, discussions there of how to keep employees having access to some of these COVID programs that are available to them, things that employers need to really be aware of when they're bringing their employees back to work. Or if your employee is too scared to come back to work, what are the discussions that you really need to be having with that person? A lot of good information on our COVID website, and you can see the link there. So Julie, if there's no more questions, I think we're all set.
No, I think we're great. I really appreciate you all being here today. Lots and lots of good information, and I guess we'll look forward to seeing what changes come about.
Terrific. Thank you very much.